Money has always been about trust. Trust in kings, banks, governments, and eventually trust in numbers on a screen. Then, in 2008, right after the global financial system nearly collapsed, an anonymous figure known as Satoshi Nakamoto dropped a quiet bomb on the internet: Bitcoin. No banks. No governments. No permission. What started as a 9-page PDF became a global experiment that challenged how money works, who controls it, and why we trust the system at all. This is the story of Bitcoin's birth, its chaotic rise, its crashes, its critics, and its strange survival. A financial revolution disguised as code, memes, and audacity. To understand Bitcoin, we need to go back to 2008. That year, the global financial system collapsed under its own weight. Major banks in the United States and Europe had spent years creating risky financial products, lending money they didn't really have, and assuring everyone that the system was stable. It wasn't. When everything started to fall apart, governments stepped in. Trillions of dollars were created almost overnight to save banks considered too big to fail. Ordinary people lost homes, jobs, and savings. Banks received bailouts. Trust in the system took a serious hit. And trust is the foundation of modern money. In October 2008, on a small cryptography mailing list, a paper appeared titled Bitcoin, a peer-to-peer electronic cash system. The author signed it with a name no one had ever heard before: Satoshi Nakamoto. To this day, no one knows who Satoshi is. An individual, a group, a very motivated programmer with a strong dislike for banks? No one knows, and that mystery became part of Bitcoin's mythology. The idea behind Bitcoin was radical but surprisingly simple. Bitcoin proposed a digital currency that did not require banks, governments, or intermediaries. Instead of trusting institutions, users would trust mathematics, cryptography, and a distributed network of computers. At the core of Bitcoin was the blockchain, a public ledger shared by thousands of computers around the world. Every transaction would be recorded in blocks, linked together chronologically, and protected by cryptographic rules. Once added, a transaction could not be altered without rewriting the entire history of the chain. In January 2009, the first Bitcoin block was mined, the Genesis block. Embedded in it was a message referencing a newspaper headline about banks being rescued yet again. This was no coincidence. Bitcoin was not just a technical experiment, it was a statement. At first, Bitcoin had no real value. People mined it on personal computers, mostly out of curiosity. Early adopters were programmers, cryptographers, and internet enthusiasts who believed in decentralization, privacy, and open systems. Then came 2010. That year, the first known real-world Bitcoin transaction occurred. A programmer paid 10,000 Bitcoins for 2 pizzas. At the time, it was worth about $40. Today, that transaction is legendary and painful. As Bitcoin slowly gained attention, online exchanges appeared. Prices started to rise. Media outlets began covering it, usually with skepticism or confusion. Governments didn't quite know what to do with it. Banks largely ignored it. Then came volatility. Bitcoin experienced dramatic price increases followed by brutal crashes. It was declared dead repeatedly. Exchanges were hacked. Scams appeared. Criminal marketplaces used it, giving Bitcoin a reputation problem it still hasn't fully shaken. But here's the strange part. Through all of this, Bitcoin itself kept working. The network never went offline. Blocks kept being mined roughly every 10 minutes. Transactions continued to be verified. By the mid-2010s, Bitcoin had evolved beyond a niche experiment. It began to be seen as a speculative investment, a hedge against inflation, a store of value similar to gold, a tool for people in countries with unstable currencies. In places facing hyperinflation or strict capital controls, Bitcoin offered something rare, an alternative system that didn't require permission. By the 2020s, something unexpected happened. Institutions that once dismissed Bitcoin began buying it. Public companies added it to their balance sheets. Financial products tied to Bitcoin were created. Governments began regulating it instead of ignoring it. Bitcoin had gone from rebellion to reluctant acceptance. Today, Bitcoin exists in an uncomfortable middle ground. It is too big to ignore, too volatile to fully trust, and too decentralized to easily control. Some see it as digital gold. Some see it as a bubble. Some see freedom. Others see chaos. But regardless of opinion, Bitcoin changed how the world talks about money. And once that conversation starts, it's very hard to stop. Bitcoin doesn't promise to fix the world. What it does is force a question. Why do we trust money the way we do? It showed that currency doesn't have to be physical, centralized, or controlled by a single authority. It doesn't have to ask permission. Bitcoin may rise or fall. It may evolve or be replaced. But the idea it introduced that money can exist outside traditional power structures is already out there. And once that idea exists, it's impossible to put it back in the box.